Have you ever looked up at those massive, gleaming skyscrapers in a major financial district and just wondered, how do they pull it off? I mean, how do these institutions pay for towering buildings, employ thousands of people, and rake in billions every single year? Well, today we're cracking that puzzle wide open. We're going to look at the sheer scale of the banking business and figure out how money literally makes more money. Most of us just treat banks like highly secure storage units, right? We hand over our cash and we expect them to keep it safe. But here's the thing. If all they did was keep your money stuffed under some metaphorical mattress, they'd go out of business overnight. So how do they actually generate that kind of staggering wealth? Let's dive in.
Part 1. The Vault Myth.
The moment you drop off a deposit, your money doesn't just sit there in some giant passive vault gathering dust. Not at all. The reality is, a bank operates as a highly active economic engine. They immediately take your capital and deploy it, lending a massive chunk of it out to someone else who, say, wants to buy a car, start a new business, or purchase a home. Essentially, they're borrowing your money to lend it right back out, converting your idle cash into active financial leverage. It's brilliant, really.
Part 2. The interest spread. Okay, so now that your money is in motion, we hit the true secret engine behind all of this banking revenue, the interest spread. Simply put, this is the gap between what a bank earns on the loans it issues and what it pays out to you for your deposits. And that margin right there, that is absolutely crucial. It's the core profit driver of the whole model, taking the simple act of moving capital around and turning it into a massively profitable enterprise. Let's actually look at the math for a second because it's super interesting. Imagine you deposit exactly $1,000 into a savings account. Now, to incentivize you to keep it there, the bank pays you, let's say, a 2% interest rate, right? So that gives you $20 over the year. But simultaneously, they turn around and lend that exact same $1,000 to another customer at a 7% interest rate, earning $70. Subtract your 20 from their 70 and boom, the bank pockets a neat $50 profit. Just $50. Now, obviously, $50 is not going to buy a skyscraper, and it definitely won't pay thousands of salaries. But remember, that profit is just from one single $1,000 deposit. The real genius of the banking industry is the multiplier effect. When you apply that simple spread across millions of deposits and millions of loans day in and day out, it scales into literally mind-boggling profits. It's wild when you really think about it.
Part 3. The power of fees.
But wait, loans aren't the whole story here. Banks also run a secondary, insanely lucrative revenue stream, and that is service fees. We're talking monthly account maintenance charges, ATM fees, international transfers, credit card fees, and of course, overdrafts. Now, on an individual level, a tiny ATM fee just seems like background noise, right? But again, apply that massive multiplier effect we just talked about. Millions of these automated little background microtransactions scale up into literally billions of dollars in pure, steady revenue for the bank.
Part 4. Beyond everyday banking.
So, to guarantee those massive profits keep rolling in, large banks diversify even further. They don't just lend to regular consumers like you and me, they actually act as institutional investors themselves. Huge portions of the money flowing through a bank are used to purchase government bonds and other financial assets. This creates yet another super reliable, massive income stream, but on a global scale.
And they build outward from there. They offer wealth management, investment advice, insurance, and specialized business banking services. By putting together this intricate web of highly diversified revenue streams, large banks make sure that their overall business model remains incredibly resilient and, honestly, wildly profitable, regardless of what's happening in any single market sector.
Part 5. Why banks actually matter.
Now, despite all the fees and the massive profits we've covered, this entire complex financial system is, well, it's really the bedrock of modern society. By actively shifting capital from people who have it to people who need it, banks act as the primary engine for broader economic growth. They help people save money, they finance homes, launch businesses, and provide the essential infrastructure that makes everyday payments and commerce possible. Simply put, without this active scaling system, securing capital and running a modern business would pretty much grind to a halt. So, as you can see, banks are far, far from being just passive storage units. Behind every single checking account is a highly active, aggressively managed system designed to keep funds in constant motion. So the next time you log into your banking app or drop off a deposit, take a second and ask yourself, where is that money going to work today?